We're going to calculate the stock price for Costco using prior financial information. Now let's get the market cap, 136.7. And now the stock price, 309.56. And next we need the free cash flow. And the best way to value a stock is to calculate the future free cash flow and then discount that dollar amount back to today's dollars. And that's what we're doing in today's video. Now net income is also part of the model, and we're going to get that next. And also revenue. And as you can see, the revenue increases nicely every year. So does net income. So it's a really healthy company, Costco. Now we need to look at the capital structure of Costco and figure out the discount rate we need to apply to the future cash flows. So the interest expense is $150 million. And now let's see how much debt they have. We'll go to the balance sheet for that in the liabilities section. And then the current debt is $1.7 billion. And the non-current is $5 billion. So the $5 billion is due after 1 year. Interest payments are tax deductible, so we need to find the effective tax rate to see how much we have to discount the interest by. So income before tax, 4.8 billion. And the income tax is $1 billion. So they pay 22% of taxes. So the cost of the debt is 1.71%. And now let's do the cost of equity. So we need the beta for that. That's a volatility of the stock. They have a low beta, under 1, so it's very secure. Not volatile at all. And the cost of equity is 7.7%, and we use a CAPM model to figure that out. And now we need to blend the equity and the debt together, and we get the WACC, which is 7.41%. So 7.41% is the price Costco pays to obtain financing. So Costco needs to generate at least 7.4% of profit a year to add value to its investors, which I'm sure it does. And now we calculated the free cash flow, and this is for 4 years. And then we did a terminal value, which is all the future cash flows, and we used a Gordon growth model for that. We discounted the cash flows back to today's dollars, and then we get a value of Costco of $75 billion. And if we divide that by 442 million shares, that implies a stock price of $171, even though it's trading at $310. So if you look at the chart of Costco, it was probably trading closer to intrinsic value 2-3 years ago. So stocks can trade higher or lower than intrinsic value. And the stock price is predicated on supply and demand of the market. So obviously the market is saying Costco is worth more than the financials indicate. So they're forcing the price higher. So that might be true. They may keep growing and grow even faster, and the price may meet intrinsic value. But that's for you to decide. And if you ever look at those financial websites with those experts that give their opinions on stock, so some analysts will say buy Costco, others will say sell Costco, but each analyst uses their own model and their own unique assumptions. But you never really see their model. This is my model and my opinion. So I hope you liked the video. Thanks for watching.